What's up, builders? This is Raise the Bar Radio, where we talk about building wealth, raising capital, and all in all, raising the bar in your business and your life. This is the No BS podcast for capital raisers, investors, and entrepreneurs who are serious about scaling their business and living life on their own terms. I'm Seth Bradley, securities attorney, real estate investor, and entrepreneur, bringing you world-class strategies from the best in the game. If you're ready to raise more capital, close bigger deals, build a better you, and create true financial freedom, you're in the right place. Let's go. Welcome to Raise the Bar, elevated conversations around entrepreneurship, capital raising, and real estate. Jon Jasniak is a land investor and entrepreneur who has successfully completed over 30 land subdivisions valued over $25 million. He owns the town of Cornutus, Texas, just outside of El Paso. Formerly a petroleum engineer, Jon has been investing in land since 2016 and now teaches others to do the same. Jon, welcome to the show, brother.
Dude, Seth, thanks so much for having me, man. Excited to be here, and really appreciate it.
Absolutely, man. Thanks for being flexible here with our, our technology issues, but that's what we got to deal with. But all good, man. Jon is a client of mine as well on the Raise Law side, and he's a prolific land investor and very well connected, and is an incredible educator. You do a ton of different stuff, man. But if somebody comes up to you on the street and asks you, "What do you do?" What's your pitch? What do you tell them?
That's funny. I ask myself that question often because there's so many different things going on. I would tell them I'm a land investor and I own a town in Texas. That's kind of my go-to nowadays, I guess.
Yeah, man, that definitely gets the conversation going, right? Like they're like, "Wait, you own a town?" So let's just dive straight into that, man. What do you mean that you own a town? Are you the mayor or what?
Yeah, technically the mayor, I guess the king, whatever you want to call it. The funny part is it's an unincorporated town, so it doesn't have any local government, so to speak, or anything like that. So it's basically 28 acres with a bunch of improvements: motel, cafe, gift shop, mobile homes, short-term rentals. So I guess I give myself whatever title I want.
That's right. Well, when you own the town, you can call yourself what you want. I like king, man. You're the king of the town.
Let's go. I like it too.
Yeah. So do you own all of the businesses? You own all the real estate, right? You own all the buildings. And then do you also own all of the businesses within the town?
I do, yeah. And you bring up an interesting point. One thing that I kind of pride myself on, I guess, is I own 100% of everything. All my businesses. Of course, partnerships are powerful. Partnerships are strong. I have partners in land deals, but that's a deal-to-deal basis. When it comes to business, I own 100% equity in everything I got.
Yeah. How do you manage all that within that town?
I got, call it 10 employees out here, one full-time ops manager because, I live in Fort Worth, so I'm 8.5 hours from Cornutus out near El Paso. So I have a guy who's out here on site, and then 7 to 10 basically full-time hourly employees, depending on how you look at it on the day.
Gotcha. What's kind of the business there? I mean, what's the draw? Is it kind of a, do you get tourists that come into town? Is it kind of like a cowboy town, or describe it for us?
Yeah, so it's a lot of through traffic. We're on a semi-major highway out in Hudspeth County, Texas. So you got the travelers and passerbys, and then we host events every month where we pull folks out from El Paso. That's kind of the main part of it. Is it's an event-based business, really, and then we have the day-to-day operations, which are just travelers and passerbys.
Got it. Makes sense. Yeah, I've occasionally heard of people buying islands, but not necessarily a whole town. How did that come about?
Yeah, one day we'll own an island. I'm doing all this stuff in the personal branding and coaching space, like you had mentioned. I was like, what better way to take it to the next level than to own a town? And I went into this thinking it would be a lot easier than it is, if I'm being honest. And it's been a lot of work, a challenge, but it's so much fun, dude. I love being out here with friends and family. We got investors and friends out here now, so I've successfully kind of pivoted to connecting the coaching space to the town. So, if investors or clients or whatever want to come out, we hang out, we talk shop. I got a brisket on the smoker out back right now. We'll do a little 8-hour smoke for them, get some brisket and ribs for dinner, cook for them, do the whole 9 yards.
Oh, that's awesome, man. So there we go. So you're really leveraging that asset to host events, to bring in investors potentially, to bring in partners, to really expand your personal brand, things like that, right?
That's right. Yeah, and there's, I don't know a better way to do it, honestly. I mean, when you buy something like this, I just try to leverage things from all angles, whether it's, property, real estate, cars, toys, yourself, props, whatever it is.
Yeah, let's roll into that, man. You have a really strong personal brand, specifically on Instagram, and I'm not sure about other platforms and focus as far as other platforms are concerned. But what made you focus on your personal brand, whereas other people, they may not focus on it, or they may not see the importance of it. But as an entrepreneur, a real estate investor, you saw that pretty early on, the power of a personal brand. I mean, what kind of what sparked that in you to build that from the beginning?
Yeah, man, I think it's really just the time we live in. Whether you're Elon Musk, like I would say Elon Musk has a personal brand, whether it's Tesla, SpaceX, whatever it is. So, if you're raising money, or especially in real estate, having a personal brand is super powerful. I just, early on, I started doing small amounts of posting and had, people hit me up. Hey, what are you doing? Can I invest in you? Can I invest in your projects? And over time, as I was growing on Instagram, and now we're trying to fire up YouTube as well, up over 10,000 subs, which is, not much, but it's a good start. And people want to know what you're doing, and especially if you're in business, they want to see kind of the face behind the curtain, right? Like, just to raise money or do real estate deals as kind of a corporation or a business front is, in my opinion, not nearly as powerful of showing them what's behind the curtain, your successes and your failures. So I try to keep it funny and like edutainment. Like, I like to post a lot of fun, stupid stuff. I think that honestly draws the most attention, sadly, but that's the world we live in. Which, I'm sure you see a lot of, all the stupid stuff being posted online, but it's been a big success for me in raising money and, in the coaching business especially.
Yeah. Would you recommend focusing? I think people struggle with this. They get to the point where they're like, yes, I understand the importance of a personal brand. Yes, I want to focus on social media or producing content. Would you recommend focusing on one platform or kind of going for omnipresence right out of the gate?
Well, it's really hard to hit omnipresence right out of the gate, especially if you're a beginner, because it's like there's so many different things going on. So actually the king of all the platforms is YouTube. So like if I was doing it over, I would have hyper-focused on YouTube to start and then repurposed all my long-form content as, short forms for TikTok and Instagram. I kind of hyper-focused on Instagram to start, and so, my long-term or my long-form content is kind of slowly catching up. But really, we live in like a long-form age, in my opinion, with the podcast, whether it's Joe Rogan or whoever it is. People want to have those long conversations, 2-3 hours on podcasts and on YouTube. And so YouTube, I think, is the place to focus and kind of branch out from there as you slowly grow, because it can be a lot to manage.
For sure. And tell us about how that's actually converted. Because again, some folks out there I don't want to be on camera. I don't want to record myself on a podcast. I don't want to put in all this effort, time, or they're just they're just not used to it, right? But give us a real world example of how that's benefited your business just by having that presence online.
Well, it's completely natural to have those feelings as a beginner. I certainly wasn't good behind the camera or even liked being recorded when I started. Most of my stuff sucked. But just recently, yesterday, when we're recording this, I closed a land deal. It was $1 million purchase, and I raised $800,000 from a private investor just on a deed of trust as a mortgage note on the property. That dude has been following me on social media for quite some time, and we met up at an event, and he's like, hey, been seeing your posts, following you for a while. So I was hitting him on the social media stuff. Then, we eventually caught up in person. He's like, I'm a former athlete. I got a bunch of capital. I don't know what to do with it, and I would love to invest in one of your land projects that I see you got going on. So that dude came in at $800,000 at an 18% interest, basically a hard money lender, and he's my private investor on this deal. So $800K is pretty powerful just to be able to raise it. You get to a point it almost seems too easy, if I'm being honest. Just people trust you, and if you're transparent and authentic, you can really build trust with people you don't even know, which is kind of scary in my opinion.
Yeah, that's incredible, man. I mean, I've had the same experience as far as when I first started. Like, I was scared to death to be in front of a camera. Never had done anything like it before. Launched the podcast. I was like, man, should I just do audio because I don't want to even be on camera, that sort of thing. But once you just kind of get the reps, it's just like anything else, whether you're starting a business or you're in your W-2 and you get good at your job, whatever it is, like you just need the reps. And once you get more and more reps, you get better and better at it. And there are just endless benefits to it. I mean, just being a better speaker in general, having better conversations with people out in public, like all those things are just tangential benefits that come along with producing content, whether that's short form or long form content or starting a podcast, whatever it might be for your business. Yeah,
100% agree. And you're going to suck at first, let's be honest. And
for sure.
You got to just push through that anxiety, in my opinion, and, hit record, basically. Start simple, in my opinion.
Yeah, for sure, man. Again, just back to doing reps. It's not going to be good. Like, it's just not going to be good at first. I mean, there might be a person here or there that are just kind of blessed with that skill set, or maybe they were, I don't know, salespeople, something like that in their W-2 where they might have that skill set naturally, but still, it's kind of an awkward thing, and it's a skill set that you've got to develop. Tell us a little bit more about your business, man. Like, you're the land guy, right? So like, what does your typical deal look like? Like what's working out there for you right now?
Yeah. So, big into subdividing land. That's the core of the business. We take, call it 100 to 500 acres, buy it in bulk for a cheaper cost per acre. And then we'll go in, we'll put in roads, prove up water, run power. No vertical development yet. So all horizontal development. We'll take that bulk acreage, run it through county approvals. I like to operate outside of city limits where the regulations are less stringent, no crazy rezoning, entitling, engineering, anything like that. We bring the acreage down to something that's more affordable for Joe Schmo, and we originate a lot of owner financing notes. Traditionally, 15% of my land sales have been cash, 85% have been owner finance. So we hold a lot of paper, take this large land, break it down into smaller lots very simply, and then we originate a bunch of owner financing notes, and we get paid monthly, and then we sell those notes if and when we need to raise capital and do more projects.
That's awesome. Do you typically just work in Texas, or what states do you operate in?
All Texas-based, hyper-focused. At the end of the day, this can be done anywhere, so I tell people all the time, there's a few states that I would stay away from, like your Californias, your super highly densely populated, New York's, Massachusetts up there, is because you can't find land that's affordable. But at the end of the day, this can be done everywhere, but hyper-focus is extremely important, I think, in any business. And so we're hyper-focused on Texas, which is, billions and billions of dollars in land, millions and millions of acres in Texas that are just waiting to be developed.
Yeah. What are some of the specific things you look for in one of these big pieces of property that you want to subdivide and horizontally develop? I mean, because you can get online and find all kinds of listings for land, and some of it's, just it's not going to be developed. It's not in a desirable location. It's not a desirable piece of land. What are some of the specific things you look for? Specifically, I guess, in Texas, because that's your market when you're looking at these types of properties.
Yeah, it needs to be 60 minutes or so outside of a major city. And I like outside of city limits, like I talked about, so that way the restrictions and everything are a lot less. And water. Water is a huge component, especially in Texas. Water is becoming more and more scarce. And so, when you're trying to develop a piece of land, especially going small in acreage, you need to prove up water. So proving there's water close to a city where the market and demand is there. And I like little to no restrictions. Like, affordable housing is huge nowadays, so to be able to create a 1, 2, 5 acre lot that someone could put a mobile home on, or have some livestock, or shoot their guns, like, that is extremely, extremely desirable nowadays.
Pardon the interruption, but we don't do ads. Instead, Know that if you're raising capital for real estate, my law firm, Raise Law, is here to give you the expert legal guidance you need to raise capital compliantly and structure and close your deal. And if you're looking for a done-for-you fund-to-fund solution, TribeVest is the industry's only all-in-one setup and fund administration solution. Visit raise.law and tribevest.com to learn more. Makes sense. Are you planning at some point to go vertical on some of these properties, or is that kind of the end of where you see, and that's kind of your buy box or your development box, I should say? Yeah,
man, it's a great question. It's funny because I was talking to a mutual and a friend of ours, an investor, and we were just having this conversation yesterday. It's like, I think all businesses, really, most businesses, I don't know about all businesses, hit a scaling limit, right? Like, you can only buy so many small pieces of land and flip them and make money. You can only subdivide so much land, sell them off, and make money. So I think this business model will hit a kind of a scaling ceiling, so to speak, and then it makes sense in that point of time, in my opinion, where, okay, what's next? Are we doing multifamily? Are we going vertical? Are we doing, traditional subdivisions with 3x2 homes, curb and gutter? So, for sure, one day I could see that happening, especially if I keep going, if I'm consistent with it. But the business model I'm operating now, I think you can certainly do $1 billion just in Texas. There's so much land out there, people don't realize that. It's not as scalable as like a multifamily or a storage, in my opinion, because, with raising your funds, people are creating these funds, raising 10, 50, $100 million into a multifamily project or a car wash or storage or whatever it is. That's just one project. For me to make $100 million in developing land, that's probably 10 projects at least. So when we hit that scaling limit, I think for sure we'll be looking to go to the next level, no pun intended, raising the bar and going vertical.
There we go, man. There we go. Tell us a little bit more. I wanted to circle back to something you said earlier. Tell us a little bit more about owning 100% of your businesses and of the things that you get into, because we do talk about raising capital, bringing in investors, those sorts of things quite a bit. And when you do that, you give away a lot of your equity, whether you're doing some sort of a private equity roll up or buying, using a syndication model to buy a commercial building, something like that. You're giving away a good piece of equity, right? Like a lot of times you're giving away 50, 60, 70, even 80% of your deal by bringing in those money partners. What's your strategy behind that, or how did you stick to that strategy? How are you able to scale to where you're at and still keep all that equity?
Well, I would say because I'm a big debt guy. Like, I love debt, but you have to use it responsibly. And if I was going back and kind of restarting, I would actually, to your point, probably look to give up equity earlier. Real estate is different. You can give up equity on a deal-to-deal basis. If I had a business or a brand, I'm probably not interested in giving up any equity, like Cornutus. Like, I don't ever see myself giving up any equity in the town, so to speak. But a real estate deal, whether it's a car wash, piece of land, multifamily, whatever, is unique because you can give up equity in one deal but not give up equity in your business or your brand or whatever it is. So as a beginner in real estate, I would actually advocate for giving up more equity earlier, using other people's money and scaling quicker. I gave up little to no equity and used all my engineering capital in the beginning and scaled slower. So if I was doing it over on a deal-to-deal basis, I'd probably be looking for money partners, starting a fund, raising capital earlier so that I could scale sooner. But I'd be very careful not to give up equity in kind of my broad business or my brand, because that's super important to me. So I would say kind of separating those two things and having that realization that, especially in real estate, because it's so unique, you can give up equity in a particular deal. I would do that sooner.
That's awesome, man. What are you seeing out there, either for yourself or with your students, as far as raising capital? Because it's pretty difficult out there right now to raise capital, raise it quickly, raise it efficiently. Investors out there are a little bit timid of the economy. They're a little bit timid of interest rates and things like that they're concerned about. What are you seeing out there that's working? Because it seems like you're having a lot of success as far as getting your deals funded. So, what's working for you, and what are you seeing out there from your students as well?
Yeah, and rightfully so. People should be timid and a little bit cautious right now with everything going on. Back to the personal brand thing and having credibility and a track record. Like, in the beginning, I would say give up a bunch of equity, build up a strong track record, document the process, and then have that as hard, tangible proof for investors that you've had success, you have an ability to make money, and then it gets easier from there. In the beginning, let's be honest, probably going to be pretty difficult to raise $1 million. I mean, you coming in, you want to do your first land deal, whatever it is, it's going to be a little bit challenging to convince someone to give you $1 million. So, of course, you got to start small. Friends and family in the beginning is always a great option, trusted network. And one thing that people don't do, which always blows my mind, is like even when I'm not doing deals, like I'm networking. I'm talking to investors. Who's got money for me? Who's interested in doing projects? Like that's almost a full-time job in and of itself. Networking with investors, finding money. People think that they're going to just find a deal, then go find an investor. Well, that's true, especially if the deal is good. But it's a lot more powerful to have a network of trusted investors that you've built from your networking efforts, from hosting people, having live events, going to live events, and building up that network constantly. Like that's almost, like I said, it's a full-time job in and of itself.
Totally. You've got to figure out a way to get in front of strangers, whether that's out there networking, whether it's, for me, it's a podcast, whether it's, creating social media content so strangers are seeing your content and you're building that trust, whether you're face-to-face with them or not. There's just got to be a way. It's got to be a platform for you to get out there, even if it's just face-to-face, even if meetups or what have you. But you've got to get out there in front of people to keep building that network so that you can keep a refreshed base of potential investors and partners.
Yeah, have you ever messed around with Facebook? Like I like Facebook. There's a bunch of hard money and private money groups out there. Like literally, if you just go to Facebook, go to the search bar, search private money lending, hard money lending. Like I've met a lot of decent people in those groups, just posting my projects, responding to other people's projects, and just kind of seeing what's going on. So just stupid stuff like that. And then this, like all the live events, whether it's real estate specific, raising money, like there's so many different events out there now that you can go to just to meet people in person. And it's a never ending game, man. Networking is just, your net worth is who you know. I mean, that.
100%, man. Yeah, and yeah, I mean, you've got to get out there. You got to network. There's no avoiding it. That's how you up your game. Get yourself into the right rooms with the right people, and that's really one of the massive keys to success. And one thing I want to point out about land, and you can let me know if you've seen this same thing. And I haven't raised capital for land before myself personally, but through my clients, I've seen that land is particularly awesome to raise capital for because of the timetable, right? Like you can get your investors their money back quickly, rather than let's say a value add multifamily deal that goes perfectly. You might be able to refinance in 2 to 3 years and then you sell it in 5. That's usually the business plan. But that's if everything goes well, the economy's going well. Like right now, those folks that got into these deals in 2022, 2023, you're going to be holding those for a while till the economy kind of goes back the way we need it to go from a real estate perspective. But with land, you're subdividing it, you're moving quickly, you're selling quickly, and you can be in and out of these things in 6 to 18 months and returning all your investors' capital back, and they're ready to go again. Like they're like, yeah. All right, when's the next deal? Because you just already returned my money and gave me a 2x return or 3x return that quick. Like, when's the next deal? And you can get some momentum going pretty quickly.
Well, I don't know if that's because maybe we worked together a little bit and you see my stuff going on or what, but I would say that exact mindset you laid out is contrary to what many people think about land. Most people have this misconception that land is illiquid, it's hard to sell, it takes a while, et cetera, but when you get into these smaller lots, especially creating owner finance notes, to your point, this stuff tends to move very quickly, especially if you're in a decently strong market. And yeah, we've had a lot of success getting investors their money back in less than 12 months. The one great thing about land is the timetable you just laid out and the returns. Like the returns tend to be a lot higher than your multifamily or whatever it is. But the huge downside, which I'm sure is why you see a lot of people coming into, whether it's multifamily, storage, whatever, these other asset classes through funds, the big downside to land is the tax. like you're going to get hit with the big tax because you can't depreciate land. So there's like no great tax benefits to land, but offset that with a lot higher IRR and return and a quicker timetable to do it. To me, it makes more sense to invest in land. I mean, that, I'm partial, I guess. I'm biased, but there's pros and cons to everything, obviously. But you can't depreciate land. If that ever gets changed, I mean, that's going to be crazy.
Yeah, 100%, man. I mean, there are different positives and negatives to different types of investments. You just named, the main negative to investing in land is kind of that tax. The tax benefits aren't as strong as they are with investments that are vertical rather than just the land by itself. But the speed of money offsets that a lot, because again, if you can double, triple your money or even more, I've seen a lot of these deals go really, really well, and you can do that in a short amount of time. It's like, okay, well, maybe I can invest in something else to help me with my tax to offset some of that income, maybe an oil and gas investment, something like that. So you can get kind of a good spread across your different types of investments to go along with the land to offset that. So yeah, man, did you want to add something there?
I mean, that's exactly what I tell people is like, go, at least that's my exact philosophy. Like, go make a bunch of money in land, hopefully quickly, and then create yourself a nice little tax problem where you owe the government a bunch of money. Go to, whether it's yourself or some operator manager who's operating the fund, and invest in whether it's oil and gas, multifamily, and then get yourself those nice tax benefits and hopefully some monthly cash flow. That's my philosophy. Is I'd rather make a bunch of money quickly and have a tax issue than I'm a doctor or lawyer and making $200, $300, $500 a year and say, okay, I can get some tax benefits in multifamily, but that monthly cash flow and the actual returns are not as strong.
Yeah, I love that, man. Get out there and create a tax problem for yourself, right? Like, create some wealth, create some income so that you have a tax problem. Like, that's actually a great place to be in, rather than the opposite, which would be not creating wealth, not having income. Get out there and create yourself a tax problem. I love that, man. I
might use that as like a new pitch in some of my social media stuff. Create a tax problem through land.
That's perfect, dude. I love it. All right, brother. So you're a land expert, but I always like to ask people this. In a parallel universe, tell me about a different version of you. So if you didn't go into land, maybe there was a time and place in your life where there was like a pivotal moment. Like if you would have did the other thing or said the other thing, it would have went a different direction. Tell us about that different version of you.
100%, man. If it wasn't land, to me, it would probably be stock trading. When I first came out of school, like I was obsessed with the stock market, trading. I love the adrenaline. It's addicting to me. Like I don't really have an addictive personality, but like just sitting behind the charts with a dual monitor or quad monitor or whatever and trading stocks, that would be my alternative universe. And I think it kind of has a parallel to land in the fact that no tax benefits. It can be high returns if you're good, but I was never that good at it. I gave it up. Basically, I was a break-even trader. I tried it for probably a year and a half. I would study, I would journal, I would do all those things. And, most things get pitched as a passive investment, which if you're investing in a fund or, an operator in storage or some commercial real estate, it probably is passive. But, stock trading certainly isn't passive. Land isn't passive as an operator. So I think in an ideal world, you find something that is as passive as can be. But for me, I just love the adrenaline and the activity, and I'm an operator at heart. So if it wasn't land, it would probably be stock trading. I'd be sitting here, dual monitor at market open, ready to crank away. And you can make a lot of money doing that. There's a lot of successful traders, but they say 90% of traders lose. So that is, it's a risky business, a tough business, as opposed to real estate.
Yeah, that's awesome, man. I think you made the right choice looking at the success you've had. How are you raising the bar in your life and in your business?
Man, I'm trying to get more consistent with everything in my life, waking up, hitting the gym, operating the business, and then what we already talked about, networking. I'm in a place in my life now where I love it. Like I love the daily grind, the activity, the operating. And so I'm trying to meet more people who have money, more people who can help me get to my goal, which is a $100 million land business. And So in the trenches, grinding away, trying to meet more people who have money, more people can help me raise money, like yourself and other investors. And, we started my first fund, which we hope to get off the ground here soon. We almost got it off the ground here a couple of weeks ago. But, so raising money and taking it to the next level, because, especially in real estate, not much happens without other people's money. I mean, it's the name of the game. So networking and raising money.
That's great, man. Jon, great having you on the show. Where can our listeners find out more about you?
All over social media, man. Jon Jasniak, YouTube, Instagram, jonjasniak.com. I answer all my DMs. It's all me. If you got a land deal or you want to just chop it up, whatever it is, I love looking at deals, answer all the DMs direct, and, I appreciate all the support for those who tag along. I think I kind of tell myself I'm just getting started with the whole content creation and everything, so we'll see what craziness we can get into in the near future.
All right, brother. Thanks again.
Thank you.
Thanks for tuning in to Raise the Bar Radio. If you enjoyed today's episode, make sure to subscribe, leave a review, and share it with someone who needs to hear it. Keep pushing, keep building, and keep raising the bar. Until next time, enjoy the journey.